Major support for these broadcasts is provided by the CUNY TV Foundation, New York Community Bank, Chase Commercial Term Lending, Chelsea Lighting, Capital One Bank, Genova Burns, Giantomasi and Webster, Kilroy Architectural Windows, New York's Window Company, the Wickoff Group, Greenberg Traurig, M&T Bank, Perfect Building Maintenance. Additional support is provided by Ackman Ziff Real Estate Group, Bank of America Merrill Lynch, Briarwood Organization, C.B. Richard Ellis, Colliers International New York, Cushman & Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, DDG, Friedman LLP, Accountants and Advisors, Flushing Bank, Herrick Feinstein LLP, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, James Orphanides, Centurion Holdings, John Katzimatidis, Red Apple Group, Corman Communities, a.k.a. Hotels, Madison Realty Capital, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Massey Knakal Realty Services, New Banks, Meridian Capital Group, Newmark Grubb Knight Frank, Popular Community Bank, Sterling & Sterling, SJP Properties, Stonehenge Partners, Urban American, and These Friends.
So we have the office market in New York City. 2012 was a little slower in the office market, but there were different aspects of the office market. So instead of bringing together 4 leasing people to talk about it, today I've assembled a really diverse group. I brought a leasing expert, I brought an owner investment person, I brought an investment salesperson, and last but not least, I brought the guy who has the money for all of these properties. So my guests, they include David Falk, who's the president of Newmark Grubb Knight Frank, Michael Giglio, who is the Chief Financial Officer and the Chief Investment Officer for Kaufman Management, James Nelson, who is a partner at Massey Knakal Realty Services, and as I said, the man with the money, my friend Rick Lyon, who is the Executive Vice President at Capital One Bank. So since you're the man with the money, and that's why we're all sitting here and being so nice to you because you have the money over there, how you lent money in 2012 on office acquisitions. I think you did for Paramount downtown. You did a couple of other buildings. How do you look at the office market in 2013? How do you look at it as a banker?
Again, we're pretty bullish overall on the office market in New York. I mean, compared to any other, we operate in 10, 15 different states.
Hey, but not Louisiana.
So,
Come on, you know.
So we like the office market, but what we like in New York is really, I see no great upward pressure on rents. I see stability, and so we look for stable buildings, lending against cash flow, and
So you're
lending
looking
conservatively.
at cash flow. James, I mean, Massey Knakal had a really good year, did a lot of office buildings, a lot of smaller office buildings were more boutique, some of them in what we would call nomad, which was a term that didn't exist. For my audience, north of Madison Avenue, we'd call it?
Madison Square.
Madison Square over there. You did some, in the hot Midtown South. Who are the buyers, and who are the buyers who want to have buildings? Because right now you have a couple of assignments to sell some office buildings.
Well, last year the REITs weren't that active because what we saw were a lot of smaller transactions, and so it was mostly private families. But you look back last year and it was like nothing I've seen before. I mean, there was a total of $40 billion in sales, but the average sale, 92% of them were under $50 million. So it was mostly the small to mid-sized properties.
What happens when you're with Bob Knakal? You become a statistician over here. What is this? Junior statistician?
I promise I can back him up. But I think the point is that the profile of the seller last year were long-term owners who were looking to sell before capital gains went up, and they did. They went from 15% last year to 20%, plus the 3.8% surcharge. So we saw a lot of small to mid-sized properties change hands. So
but you told me you have a couple of sales right now, so people haven't changed their mind to sell property, even though the taxes may be going up.
Well, there are certainly a lot of owners who weren't tax motivated, and we think it's a phenomenal time to sell. And this, of course, sounds self-serving, being the broker. However, our listing inventory was decimated after last year. In '07, we might have had about 750 exclusive listings. Last year, we had about 550. Starting this year, we only had about 425 because we had so many sales that took place. I mean, December was our busiest month ever in the company's history. So right now, we're trying to replenish our inventory, and we're telling owners, look, it's a great time to be in the market because there's the same amount of buyers out there, but there's no product.
So here's the interesting situation. One of the people that you sold the property to last year was this guy over here. So you bought a building, but they, you know, this is an established 75-year-old company, at least 75-year-old company who's owned buildings over there. Why'd you buy and why didn't you sell? Because if I'm listening on both sides of the coin, on a sell side, you could have really capitalized a lot of money, and why'd you buy?
Established, by the way, in 1909, so over 100 years old. And why did we sell? Why didn't we sell, and why did we buy? We bought because we saw an opportunity in a building that we'd bought 2 years ago at 100 Fifth Avenue. And we saw an enormous amount of value add that we were able to put into that play. We basically doubled the revenues in that building, and we had a very strong understanding of that marketplace and felt that with the building that they were marketing, that building had a smaller tenancy, was in reasonably the same type of neighborhood, wasn't an avenue building, but had a lot of the attributes that would allow us to do another value add play because it was a building that was required certain infrastructure.
How much competition was there against you buying that?
It was interesting. There was a lot of competition. There was a great deal of competition. We were told initially that the building would have to trade in the $60 million range, and we said gulp and said, well, it doesn't seem to work for us at that number. And we came in at a number that was lower than that, in the high 50s. And then by the time we got done with our due diligence, time was of the essence for the sale because of the reasons that James spoke of earlier, which were the impending tax change, and the guy wanted to be out of the deal by the end of the year. But to come back to the point, it was a very attractive play for us.
I'm in a situation that I have 4 different people. Here's the person who sells. Here's the person who bought. Here's the question, and it's a perfect explanation. You're a leasing broker. That's your specialty over here. You look at this building. How would have you looked at this building when you analyzed this? Small building. How many square feet?
120,000 square feet, call it.
Mid-block?
Mid-block, yeah.
Right? B building? B minus?
Yeah. Let me put it this way. By the time we're done with it, it should be a solid B. Should be a solid B.
No, because I have...
I'll let the broker answer that question because he knows the market better than I do.
I'm going to ask the banker over here because I want to understand how everybody plays and how everybody's going to look in the future. Okay, B building, mid-block, reasonably good area. They have their own reason for buying it. They're not asking your advice on why they buy it. How would you look at it as if they said to you, if they weren't in the management business, which they are, it was a buyer who wants to buy a building. How would you look at it?
Well, I don't know the exact address, but I'm assuming.
What's the exact address?
27 through 35 West 24th
Okay,
Street.
so like that kind of product, just the way it is presently, is it's a commodity type building in that part of town. It's a typical building, windows probably front, a little on the sides, dark in the back, and you have to ask yourself, what can I do?
Hotel.
Hotel, or are the ceilings higher? Could I do something with this that make it stand out? If not, small floor plate probably attracts small tenants. Small tenants pay higher rents.
51 tenants in 120,000 square feet. So we're talking about an average of what, 2, 3?
That's very
carpet,
unusual.
probably.
Right. But if you want to take it to the next level, you'll put new windows in, new lobby. You'll do what you normally do. And if you could, many buildings in that part of town don't have landlords willing to invest real capital to make it a higher caliber building.
That's exactly right.
And you will.
You have a traditional landlord who's owned the building, said, I want my cash flow. Don't ask me about fixing this up. You want $20 to fix it up over there. How do you, as a banker, look at a transaction like over here? This is a turnaround, okay? Because the building, for buying it what it had today, there's not really that much upside. the upside is to renovate the building, to make it like a traditional Kaufman Management building, you know, a good operation of a B property of a small space. How do you forget I'm not looking at him as the buyer. I'm looking at how you would look at a purchaser on this type of deal.
And you have to start, as I always have, and you've had me on the show before, starting with that organization. We'd like this property a lot because we know they can manage it well. You know, they know how to renovate, how to get it right, how to lease it. They know the market very well. That's what we first and foremost look at. So I might go up a little bit on leverage for someone who really understands that market, long-term buyer, typically holds for ever, you know, and is not looking to try to quickly make a play and then make a flip on this and ride a wave on that. But traditionally, what we would look at is an in-place cash flow, and we would say we'll lend on the in-place cash flow where we're comfortable on a debt yield, and then we'll allow the loan to be opened up as you add the investment to it and then realize the return on that investment. So again, what kept us out of trouble in 2007, 8, and in the 9 was we didn't do a lot of aspirational lending. We typically lent on the existing and said, but we can quickly open up this loan and give you more proceeds as as the building requires.
2012 is over. We're in 2013. How do we look at the year today? We know that we have Obama for 4 more years. We know we have higher taxes. We know that the economy seems to be getting better. The stock market's being better. And maybe that, and I was thinking of that before, now that the market, some of the people who said, I didn't want to put money in a CD paying me 0.25%, maybe I'll invest in a REIT stock, or maybe I'll even put together a syndicate to buy a building. You know, how do you look at the market in the office market as a banker for 2013?
Again, to us, we see in New York a fairly stable market. I mean, obviously, there's a lot of things happening. 6th Avenue, you know, there's a lot of vacancy and so forth. There's some question in downtown a little bit. Midtown South is fabulous.
It's fantastic,
right now. But we see it really stable. I don't see anything in the economy that is driving rents up, that is driving a lot of occupancy on that. So, and actually a stable market is a market we can do very well in. So we like the buildings, we like the values of the buildings today.
But you want cash flow and stability.
All about that.
David was talking prior to the show about he remembers a couple years ago on 620 Avenue of the Americas that the owner wanted a vacant building. And, you know, today it's a different case. Do you want a vacant building as an owner?
No way. I want sleep at night assets. I want the same thing he's looking for, which is cash flow. I don't want to know what I can be promised on a building like this that's vacant. Do you know what the market is? Do you know what you can get in this building?
Do you think that's the way James is talking these days to sell these other properties?
You know, honestly, he probably should be.
He probably is.
And he probably is, yeah.
Because
like
people are looking for returns. I mean, so you put your money in a bank today and you get 10 basis points,
and
8 basis points?
Yeah.
I mean,
Come on, if I my venture capital card with Capital One, I give 1 point.
there you get more in points.
Right.
That's
Do you really? Because then we have to talk.
No, they're right. I would definitely agree with that. You know, for us to have an office building that has short-term leases in place where you have good cash flow, a great upside story that you can get some financing on, that's definitely where the bulk of the interest is.
But where do people want buildings? You have a couple for sale. Okay, you know, I want to see, you know, David and I were talking earlier, you know, the leasing market, as I said, was mostly renewals last year. People didn't want, you were talking about UBS, you know.
So,
and the availability of space. There's a lot of space. If I can go to Park Avenue, you told me, what can I get space on Park Avenue today?
listen, subleases are discounts. So you can go up and down 6th Avenue. You can go to some Park Avenue locations, and you could probably do it at 70 cents on the dollar with good concession packages. And the tenants that we're working with, they are looking for smart deals. They really are. They're looking to say, this is an intelligent deal. I'm not overpaying. That's in Midtown. You mentioned Midtown South. The reason why...
There's a limited amount of space.
And also because the tenants in Midtown South, so many of our clients, they're expanding. They're adding to their workforce. You know, we did a chart recently tracking all these big deals and how many, they went from 12,000 feet to 50,000 feet. Very similar thing. So what's happened is they're absorbing space. Midtown South had 9 consecutive quarters of positive absorption. The question will be, where did they go? Will they start going to Midtown? Will they move to downtown to save money? We think it's going to happen both directions.
You think people are going to
We think people will go downtown to save money. Not everyone, the tenants that can't afford Midtown South. And we think tenants who can't find the large floor plate in Midtown South, who are really frustrated, will go to Midtown and say, you know what, I'll create my own environment there.
Aren't tenants taking less space today?
Yes.
More efficient space? Isn't there hoteling today, where people are coming in less to the office? So the office amount of space is not needed?
Right. So when you hear these big deals that are happening, no one's telling you what they're leaving behind. I could tell you 90% of the deals, bigger deals, someone's signed the lease for 120,000 feet, they're leaving 160 elsewhere. They're putting the ratios tighter. It's 80% open, 20% windowed offices. They're making the employee per square foot tighter, probably going from, for a media company, it could be 290 square feet to 240 square feet per employee. So everyone's doing it to save money.
Now, there's another situation. Rick was saying, and we were out in New Jersey about a month ago, you can go to the sixth borough, as people would say. You can go to Jersey City. Hoboken's a little expensive, but Jersey City, which is part of the urban tax zone, where you can get a credit, a major credit. I mean, this is like the REIT benefits of going past 96th Street or going into Brooklyn or going into Queens. There's a big benefit to relocate to the boroughs, and there's a benefit to relocate to New Jersey. I mean, how come you haven't looked in New Jersey? Or I didn't hear you saying, I want to be in Lower Manhattan either.
We are operating partners in our area of expertise. We don't profess to know Jersey, and we don't want to get in the business of learning to know Jersey. We want to do business where we feel comfortable in those markets, where we feel we could reasonably price the space, where we could lease the space, where we can get the contractors to come in and do the work for the numbers that we know we need to do it for. We're sticking to what we know best.
So here's the question. You have a lot of sales last year. You have potential sales over here. Who are the purchasers? Now, AFIRE, the Association of Foreign Investors in Real Estate, just recently came out with their results. And once again, New York City is the #1 city in the world that people want to come. So if a foreign investor comes here, who are they going to, they come here and they say, I want this building because they want to own something over here. If they have a relationship with the bank, they may have a relationship, so they'll go to their banker or capital affiliation with Capital One, and they'll say, how do you evaluate this market? How does a foreign investor, because I know they've come to you for advice, how do they make a decision when they're looking at a property to buy a property here? Because they do go to Newmark Grubb. In a variety of ways.
It's interesting, the profile of the buyer that we're working with, when I started in the business, it was the major families. Today, there are people you never heard of coming in from London, coming in from other parts of the country, and they are smart, they're aggressive, they want to be part of this, and before you know it, they have 2 or 3 properties, and we're working with them to get their name out there, and they're bullish. People are very bullish about owning and taking the properties from here. How could I get to here?
Do you see a lot of foreign purchases?
There is foreign capital flowing in, but I don't think you were seeing it that much at the operations level. So oftentimes they're providing the capital behind such operators as RFR. But it's just, this market requires so much local expertise. So to come in and try to learn the ropes, we're not seeing it in a significant way. For small to mid-sized properties, absolutely. Our website, we get hits from 131 different countries, where it's coming from all over the place. But they're looking for retail properties that are easy to manage. Office is obviously a lot more complex, and so we're finding that they're looking for local operators.
You brought up a very interesting point that the REITs weren't really purchasing. SL Green only bought one. Vornado didn't buy anything. Who did buy was these non-traded REITs. Mm-hmm. And the interesting situation is that some of the non-traded REITs, the way they raise capital is, since Rick and I are a little older, they raise capital in the old tax shelter way by paying enormous commissions to a sales broker. An 8% commission, or effectively to give the yield over here. How do you look as a banker for the non-traded REITs
Again, we have a few of those, and I know exactly who you're talking about, in one who has been active in buying some buildings. here. Again, they're good operators. They just have a retail model in terms
No,
of.
I'm not only talking about
raising
that one. I'm
equity.
talking about a variety. I mean, there's Wells, there's Lightstone. There are
Yeah,
a variety of people in American Capital,
ARC.
ARC. But I mean, how do you look at that? Because many of these REITs came out of a tick mechanism, and the tick mechanism also has a different question. You wouldn't see that in your business, but as a buyer, as a banker, this is how you have to look at it, because you don't have a guarantee normally from a REIT.
But you have equity, and as I've said often on the show,
If there's
I like it. I like
there's
guarantees,
money
but I
in your
love equity.
pocket. I like the money. I like the money of it.
And that's how we underwrite these buildings. I mean, even if you got a guarantee on a $100 million loan or whatever, what you really want is equity in the property, commitment to the property. You want exactly. I mean, I love hearing what the Kaufman organization is why we love them so much. They stick to what they know, and they do it really well.
Where are people looking? Are they looking in the meatpacking zone, like you have something on the west side over here? Are they looking in Hudson Square? I mean, both purchasers and tenants. I mean, there was a lot of activity a number of years ago when a lot of the media companies went to the Hudson Square neighborhood. You put a lot of them in over there. Are we seeing that again? Is Hudson Square still a neighborhood?
Hudson Square is terrific. It's right now it's all leased.
You have a big building, you have Beacon taking over 345.
So 330.
330, right.
That will be next. But as far as the typical, Trinity Real Estate, Resnick, they control 95% of the product. There's no large blocks down there. It's become an accepted location. It's 24-hour. It's terrific. So the question is, what's next? Mm-hmm. Is the West 50s? Is the West 38th ex-garment area?
So what about the West 50s? I mean, Taconic bought a building
Right,
on
West 54th Street.
West 54th Street recently. It's not the Hudson Yards. Hudson Yards is really ended at 44th Street. It goes to maybe down to 27th Street on the Starrett Lehigh. West 54th Street, the hotel that opened up a couple years ago went bankrupt. The Ink over there, because it wasn't the market. I mean, car dealers are fine over there, but on 11th Avenue, it's a different market.
It's hard to get to, and that's not going to change. But then again, before the High Line came, Starrett Lehigh, the West 20s, they were hard to get to. Now I have clients that say I want to be there. So I think if they can create a story that it's for a building that has either a name tenant, or they enlarge windows, they make something special, I think they can bring some brands over there. Certain tenants are less focused on transportation, more on image and their brand. And I think if they can create it there, they will go there.
So who do you think are going to be your tenants that are going to move into this new building and into the other Kaufman organization buildings? Who's leasing space today?
I think the smaller companies that are the media type companies, the internet type companies, the communications companies, I know that there are still a presence of accounting firms and law firms in the standard type Kaufman type buildings. The newer type buildings that we bought downtown, we've leased to Apple, Neta, Porter. Yelp took a large space in the building. That's the 105th Avenue asset. What is going to happen with regard to the 24th Street asset still remains to be seen. But I think there's a lot of growth orientation with a lot of these people that have become unemployed, and with the rate higher than the national average rate in New York City alone. I think you're looking at a lot of smaller companies that are started up by one or two guys who were laid off by firms who hired 5 or 10 guys to house smaller space. The incubator type tenancies are the ones that I think will make our purchase worthwhile at 24th Street.
So here's a question both for the banker and the purchaser on this situation. You bought this building and you went out. How many banks were interested in financing this type of?
Well, we did. We went to almost every bank that we did business with, and we didn't go to a broker. We basically stuck with Capital One. We were with Signature Bank, and we let M&T bid on it because they were our lender on 105th Avenue. And we came back with one bank that was interested in doing the loan. And I think that the reasons were evident, that they saw that there was value in it. All the banks, I thought, saw value in it. I think Rick I don't want to speak for your bank, but they probably had their own underwriting mechanism there, and it just didn't hit the trigger points that we needed to.
Right.
No, I think
Yeah.
I know
get
the
the
building,
kind of
I know the
leverage
transaction.
up
We
to where
liked
we
it a
wanted
lot.
it. Yeah.
I think it was just, where were the proceeds and where did we feel comfortable and all that.
So here is my question. If I went to you today and somebody said, what's the next neighborhood for the office market? Would you say, is it, do you see potential developments? There's limited office buildings north of 96th Street. And there are certain sites that have potential north of 96th Street. There is limited offices in the Queens market, okay? JetBlue took the MetLife building, over there. In the Bronx, there's definitely limited space, but the banknote building has now been leased to the city agency.
Right.
So where are the opportunities for office tenants, and where are I mean, it's a question really in general on the office market for the opportunity.
For the office tenant, it's downtown Manhattan. Think about that. You could rent space in certain buildings downtown, not an A building, but a B building at $32 a foot. You're in Manhattan with full concession packages, and there are some less expensive alternatives that are discounted on subleases. So I think downtown is still a very viable
So it's
opportunity.
good low
And
cost.
talk about transportation as
the
well. I
best.
mean, they have 13 subway lines. There's 4 major hubs that are
Right.
going in right now. I mean, they're really building a new
Wait
city
a
within
second.
a city.
Can't I go to the Barclays Center? And I'm not being facetious. I can go to downtown Brooklyn, who has a lot of hubs of space also. What about the office market in downtown Brooklyn? I mean, as a banker, how do you look at it?
Again, we don't have a lot in Brooklyn at this stage, but we're fine with Brooklyn. If the
Brooklyn
cash
is
flow-
doing great,
right.
but I'm just
Just like Jersey City. I mean, I keep
Cash
coming
flow.
back to the same thing. It's cash flow and it's
We're
that
actually
market.
looking into it
Performance.
for these media tenants. They don't really want to be downtown Brooklyn. They want something a little edgier. There's not a lot of product in Brooklyn that's edgy. If you need 50,000 feet, that's an opportunity.
What do you think of Metro Tech?
I think it's great, but I don't think it's for a lot of the edgier tenants. Those are the ones that say Brooklyn is hip and it's cool. I don't think they want to be downtown. They'd love to be in Williamsburg. Doesn't exist.
Right.
So there are other areas in Brooklyn now that we're looking into that. Can you create it there?
I mean, like where? In the
Well,
Wick? In Bushwick?
You have obviously Industry City, which is possible.
Right.
It's coming, and there's
Transportation isn't that great on industry.
that's the trade-off on all these. These buildings are great, so you're hoping to make an area where people will come and want to be there.
So I think we've really got a pretty good idea of putting all different, it's like the puzzle that we were saying about whose seat everyone was in before, of the different aspects of the office market. And I'm really happy that I put together this group. I'd like to thank David Falk, Michael Giglio, James Nelson, and definitely Rick Lyons, the money man, for being here. And I'll see you next week. Thank you.